In this video, I will talk to you as to why this Bitcoin cycle truly is different. I already made a previous video talking about the current altcoin performance and how it is heavily different from prior cycles. And in today's video, I will share even more details as why I believe this cycle is truly different and why the crypto cycles as a whole are basically changing. So if you have followed my social media, you are familiar with the chart you are seeing right before you. If you watched my last video on YouTube as well, you know that I said that Q4 is seasonality-wise the best quarter, both for stocks and for crypto. So if we look at the start of Q4, the start of October, we see that we have broken to new all-time highs, $126,000 for Bitcoin, but ever since we retraced lower and it has been a disaster. If you look at the blue lines, I have drawn them before we actually hit the current all-time high that we had in October. And I said that we are in a clear megaphone structure. And up until shortly, we were still in that structure. I said that we could easily see 50% retracements, as you can see on the screen. And the longer it takes, the deeper that megaphone bottom support would go, and that we could easily move to a 92,000, 90,000 range for Bitcoin. And that is exactly what happened at the end of last week. So up until that moment, everything that occurred was in line. What are we seeing right now? We are seeing right now that prices have broken lower. And if we look at the measured bottom from April this year to the current top, then we see the red area, which is basically a reversal zone that the bulls want to see being held. Very often in crypto, we see that we go into the red zone and then we reverse trend and move back higher. So this could easily still be a fake out in the megaphone structure that could be recapped back to the 1992K level, from which we confirm the pattern once more and we move back higher. Now, it's too early to talk about that. Many things have to happen. The first thing that has to happen for the bulls to gain control and for us to look more optimistically is we need to break the downward trend line, which we have seen at 1. Then we have to break above the EMA bands, which have turned very negative as well. And then there is a last point of resistance around 120K, which we have to break as well before we can start talking about continuation of the cycle. But let me share you some other data points as well. If we look at, sentiment right now, then we can clearly see that we have very, very bad sentiment. So the CoinMarketCap Crypto Fear and Greed Index is sitting at 11, which is basically the lowest reading we have ever seen since the indicator started in July of 2023. So we are in extreme fear. People are very doubtful, and we have been in extreme fear for nearly the whole year. So we ended 2024 in November 2024. We ended in euphoria. We had a strong move also for altcoins. We saw expansion, and basically ever since Bitcoin grinded higher, but altcoins have been bleeding. Altcoin performance has lagged, and coins basically did not regain their highs, which they made in November 24, they have only bled towards zero, as they like to call it. And we also see that on the Fear and Greed Index as a total, we had euphoria, and ever since we have been grinding lower. We saw extreme fear in April, together with a flash crash in equities, driven by Trump and his tariffs announcements. And we gained control back into greed, but now we are at extreme fear even lower. So we have had a pessimistic market for a very long time. If you look at the top, then you can also see that current funding is balanced, which is normal. We just had the biggest crypto liquidation event ever in October as well. So basically all leverage is off the table, which is good long term. But it clearly shows that right now there isn't a lot of funding going on. Everything has been wiped from the table. And if we look at equity sentiment right now as well, if you look at AAIE and other metrics like the fear and greed, we also see very pessimistic data coming from equities as well. So this is also fueling bad sentiment in the crypto market, because it only is logic that when equities are doing bad, crypto is doing bad as well, because the correlations in the last 3 years have been very high, considering price movements in equities compared to Bitcoin. So sentiment is very poor as well. Now let's take another look at sentiment. Let me put my head on the top there. If we take another look at sentiment right now, through a different lens, with another indicator, then we can see one thing. We are still sitting in extreme fear. So let's see. Our current reading is 14. Let's see at what previous bottoms were. Previous major bottoms in sentiment occurred around the level 9. So we're very close to seeing a sentiment bottom. And if we look at current reading 14, and we look at 9, and we look at the range, at the extremes we have been at, and what levels price were, then we see all kinds of different things. So if we start at the left, then in February 2018, after seeing our all-time high, we moved to extreme fear, to a reading of nearly 9. What happened shortly after was a bear market. In 2020 March, we had the COVID crash, which also caused us to move to the extreme fear low. We also saw a extreme fear after seeing our high in 2021. So in May 21, when we crashed nearly 50% from the first highs, we saw extreme fear as well. But soon after, we saw continuation to new highs. In the next occasion in 22 January, we were already peaking, as we have seen the signal in 2018. It was a bear market low signal, but soon after we continued the bear market. So that's the second signal we can see. And then the last signal we had in June of 2022 was also a bear market signal. So if we look at the rare occasions that this indicator sparked extreme fear at the bottom, then in a majority, 3 times already, we saw it occur in a bear market. So we are seeing that reading right now as well. It would make sense to say, okay, Sonny, we have passed October, classic 4-year cycle. We are seeing our first down move and extreme fear, as we have seen in 2022. But it could also still be likely that we are seeing a signal which we have seen in May 2021, where we saw a 50% correction for Bitcoin and where we soon after saw new highs. I think we can all agree that this is not like the COVID crash. That was the start of the move. We are not at the start of the move. We are near an end or past an end. So that leaves 2 options on the table. If you look at this chart, the optimistic one, we will see one more high. This is a shakeout. And the pessimistic one, which we have seen in 2 bear markets, where we are seeing a decline driven by fear, which will continue to drive price lower. Now, I want to make a remark for the bull's case as well. If you look at prior cycle, then we saw roughly 50 to 60% retracements every time we saw a shakeout occur and every time we saw new highs. We had that happen 3 times and still we made a new all-time high. Right now, we are seeing shakeouts of roughly 33, 31%, and right now we are sitting at 35 or so. I measured the low, which is around 81K at time of recording, which is 21 November. So the current retracements, even though they match a 4-year cycle peak, when you measure peak to peak, they are still within normal ranges that we have seen this whole bull market. So if you look at the end of the bull market of 21, we saw a 50% correction and a new high. We are just seeing a standard correction. It does not imply we cannot see new highs based on this indication alone. So let's look at some further data points, which may give us a clue if we are looking bearish or bullish for crypto right now and what we can expect. So a bearish data point is basically that we are below our annual open price. We are currently sitting at a minus 11% below the annual open. As we all know, Bitcoin has a bear market year. Then we have 2 to 3 years of run-up, basically 3 years. December closes high. Next year is a down year. We are currently seeing the monthly chart and we are actually trading negative for the year, which would make this cycle different because we normally have 3 up years. Now you can make the case that we front run the cycle a little bit, and that just like that we peaked in October and we are now going down, so we are seeing less performance. But one thing is clear, that if we close a year negative, that this cycle is actually different because we would have a negative annual close and only 2 up years. And we would also have a different kind of peak, which is expected, but we would have a flattened out peak where we had nearly no performance in the blow of top phase. So we would have had at least 1, 2, 3, 4, 5 months of nearly no performance and chop, followed by a breakout, which would really make the cycle a different kind of cycle. Yes, we have diminishing returns, but it would really change things up, I believe. If you look at on-chain data, then none of the metrics that people like to track and report about have peaked and given a cycle potential for a cycle peak. None of them has hit. None of all 30. Okay, I am not a fan of on-chain data. I tracked on-chain data a lot in 2021. It did not give a solid point of exit. So I do not follow any of these metrics basically as a cycle peak indication besides potentially MVRV. But I do not like these, but so far none of them have triggered. So on-chain data also continues to fail and also continues to tell us to hold crypto because the cycle is not over. So it would imply that all these metrics are failing and that the cycle is actually changing, which could be. If we look at the Bitcoin price versus the RSI, I had to take a different chart than previous videos because the BLX data has stopped working. It's now no longer functional. So we are using the data given by crypto.com and they go back all the way until 2010. So that's really good. Every cycle, we see a peak on the RSI together with a crypto cycle peak. This cycle, we did not see a big expansion all the way onto the top. Actually, we broke the uptrend line, which is mentioned in green, to the downside, and that indicates that the cycle is over. But we did not peak until to the red line, which also shows that potentially this cycle is different. We are seeing a lot less momentum. And that could be because AI artificial intelligence stocks are stealing some of the momentum. People are looking at computing, robotica, artificial intelligence. There are some other shiny balls people want to invest in. That could be the case, but equities have not been that easy either. People have been calling a recession all the time, and it makes it really hard to be very confident in equities as well, I find. So I find that difficult to believe, but it is possible that crypto has lost its shine already. Even though the gold ETF, when it came out, actually saw gold prices soar in the coming years. It could be that for crypto it is different, we don't know. But looking at RSI, it means this cycle is different if this was actually the top. Now, if we look at the breakdown on the RSI, you can see we are already sitting at the level of 51. It's really strange to show because up until October, we only barely broke the line. You can even redraw the trend line and you can actually even say, okay, we still have 3 valid points. The trend line has not broken, but with the current price action in November and the monthly isn't closed just yet, we see a big negative spike lower. And it's actually really interesting because every cycle we hit a low around the 40 mark, and we are already entering that bottom phase where we also saw the kind of behavior. And if we are looking at price action of 2019, then we can also see that RSI broke up and it retraced roughly 60 to 70% of its move up. And that is exactly where we are right now as well. So it could potentially be that RSI makes a low around the 50 RSI level, and that we are taking off as we have done so in 2029, hitting that red line to the peak. That would make the cycle the same, but it would make it extended, should that be the case, which also means that the cycle is different no matter how we look at it. Momentum is different. And we can speculate why that is. If we look at the total market cap without Bitcoin and without Ethereum, then we can see a similar picture. We saw this time a touch of the top line on the RSI, which basically means that it's a high for the market. But if you looked at prices then, we were only retracing back higher. We were not even near an all-time high at the time. We were sitting around 800 billion, and the all-time high was sitting at roughly 8 trillion. So we were only retracing when we hit hard momentum. And we saw in price cycles as well, if we look at 2021, then we saw a peak in RSI occur, and then we still saw expansion from the 350 billion all the way up into 1 trillion. So we still threefolded after that. And what happened this time? This time we actually peaked below our previous all-time high. We still managed to move higher, but we only went higher into 1 trillion. So we didn't even double. No, we only had an expansion of roughly 20 to 25% after RSI hit its peak. RSI also hit its peak 1 year before the classic 4-year cycle peak, which also makes this cycle different in that aspect, because momentum for altcoins has been going lower for a year. The same as what I showed you with Fear and Greed Index on Bitcoin. The sentiment has been peaking in euphoria, or at the end of 2024, roughly said, or in 2024 for altcoins, at the start more to the middle, and for Bitcoin at the end. And we have been going lower on both momentum and on sentiment for almost a year. And you can see that here as well. RSI has been making lower highs, and RSI has now broken out of its bottom. So it's broken out negatively, which is something this pattern often suggests. You see lower highs, which means weak momentum, and we break the floor. But we are now trending towards 39, 35, or even 30. And the level 30 on RSI is where we see market bottoms occur. If we look all the way back into 2019, we saw the bottom occur around 30, which is where we are almost. But if we look at the price, we are still sitting around 800 billion. So we are sitting a lot higher than an actual market bottom. So momentum is bottoming, but price is actually holding well. This is also a very different kind of signal. And it looks like this could mean that we are seeing a momentum bottom very soon, while prices are still elevated around current levels or around 500-600 billion. And from there, we gain momentum and we move upwards to chase actually the peak levels which RSI has seen on its trend once more. That is also something which is different and could occur, but it's mainly interesting that we are already at a bottom right now. And this is something I want to suggest. So, okay, let's assume the 4-year cycle is still valid. We can measure top to top, you can measure bottom to bottom, and if you measure the crypto cycle, Bitcoin cycle, bottom to bottom, we know that the bottom occurs in October to November in 26, and it does not mean that Bitcoin has to peak right now. We could peak later and drop faster, and still make it bottom to bottom 4-year cycle. Now, let's just use the classic info. Here on RSI, on the same chart, we have total 3, the total market cap without Bitcoin and without Ethereum. If we measure from the peak in 2018 and we measure for altcoins to the peak of 21, then we have 163 weeks from peak to peak. Then if we measure again from the 2021 peak to the current cycle peak at the start of 24 for altcoins, then we have the same length. So that made me think like, oh, actually, it looks like this is cyclically and this is correct, but momentum shows we're high and price does not follow. Maybe that's driven by the dilution of the markets and the things I said prior. People go to other shiny balls. And yeah, maybe altcoins are only retracing and are bleeding slowly to zero. We see in price that that was not the case. We made new highs. But if we look and we measure bottom to bottom, then we find something interesting, because in 2019 we made a bottom in price and in RSI around level around the 30 mark. And then if we measure to the next bottom in July of 22 on the RSI, then we have 183 weeks. If we make the same measurement, then that would imply we could see an RSI bottom this month in December, sorry, next month in December. And RSI is already, as I said, at 39. It's already at historic low levels. So that could potentially mean, if the top to top is correct, that the bottom to bottom could also play out in the same cycle. And altcoins are basically momentum-wise bottoming near bear market lows, of which they will find a base, and that base could be months, but they will form base. In 2019, it was very fast. In 22, it took a while longer. But considering where we are price-wise, and we are not at the bottom, but we are around the highs, let's say, or more to the highs than to the lows of the cycle, yeah, it could be that momentum for altcoins could be turning, all while Bitcoin is showing a different sign. And that is also something that is very different than to what we have seen in prior cycles. Let me further elaborate on that, because if we look at a different chart once more, we see a different kind of dynamic again. This is the total market cap without Bitcoin, without Ethereum, and without stablecoins. And then we look at it versus BTC, and it gives us a ratio. And here we see the same. We see a cyclical peak, we see diminishing trend, but we clearly see that altcoins versus Bitcoin have been near bear market levels. We have not seen any form of expansion just yet for this cycle. And you can clearly see that in the green boxes. In 2018, we were very low. We turned around and we made our cycle highs at the start of 2018, massive altcoin performance. We had our lows hit in 2020, all the way into 21, early 21. We were still very low right around the start of 21, slightly before, and then we changed and pulled up very fast. What are we seeing right now? We are seeing the same. We have a liquidation event. Since then, we did not retouch the lows. So it seems like momentum is favorable versus Bitcoin for altcoins. They are holding up really well compared to the low they have seen in 2025. But we have not seen the expansion phase. And we should see expansion from current levels of 0.33 into 0.6 or 6.5, whatever. We should see a 2x expansion of altcoins versus Bitcoin. And we are not seeing that just yet this cycle. So in that aspect, I think it's clear to say that there are many different dynamics which we are seeing that we haven't seen in previous cycles. Once again, let me show you momentum on this same chart. So on top you see the same chart, but now we are going to look at momentum. Momentum William indicator is a momentum indicator which is red when it's oversold, and it's green on top above like an RSI, when it's overbought. We are clearly seeing a signal in 2020 that it was on the monthly oversold, and then we reversed the trend and hit the highs. We have seen oversold conditions for a very long time, all of 2024, slightly before the start of the year, and even now shortly when we had our dip at the start of the year in before making a new high right now, so at the first quarter of 2025. Then we saw the same signal, red. If you look at momentum, you see rollover of momentum. The lines making a bottom, making a structure, double or triple bottom. We have seen that in 2020. We're seeing that right now. Then we see expansion. We see the same on the MACD histogram. The red, it decelerates, it gives a divergence, all while price is moving lower. We are seeing the same signal we have seen last cycle, but we have not seen altcoin expansion just yet. If you look at this chart. And also if you look at the RSI specifically on this chart as well on the monthly, then you can see that there has been a clear downtrend and we have broken that red line and we are breaking higher from it while we found the same support on the green line. So support has been the same signal. We broke upwards and it seems to look like we are going to see expansion because we are still making structure from that green bottom line on the RSI all the way on the bottom of the chart. And we are now expanding higher, which is also pointing to momentum for altcoins being positive. And that's very strange because all of this is happening while altcoin prices, generally, the altcoin market is not at a low, but it also didn't break the new all-time highs. And while it could be that Bitcoin potentially has seen it stop. So the cycle is really different in that aspect. A different look is the others BTC, and the others BTC just excludes the top 10 coins and then looks at BTC. So it's not like the smaller ones. It only excludes the top 10 and then looks at the alts in a different way. We see the same signal. We see really in red, which is a buy signal. Then we saw takeoff soon after, or at least as in 2020, at least a bounce until the COVID crash. And right now, we did not even see a bounce. The ratio went from roughly 0.06 at the time, all the way to a double or a triple. And right now, we are not seeing any of that. We are seeing the same oversold signal for all of the year. We are still trending low. We are sitting at the lows. When we look at MACD, we are seeing the histogram itself forming a divergence as it did in prior cycle. We see the actual moving average lines, the blue and the red line, going to cross soon, indicating we see expansion, and we see momentum potentially moving healthily to the upside. All of this while the momentum on the RSI is historically low, and it is making a market structure double bottom, which indicates a trend reversal potentially, which also implies it has potential to move higher. If we look at the Bitcoin dominance, then this also confirms that this time is different. First of all, when we have the halving, normally it takes 33 weeks to reach a Bitcoin dominance peak, and then we see a drop. In the current cycle, we continue to grind higher, potentially driven by ETF buying. That's my assumption, and the hype surrounding Bitcoin. It took a lot longer, and we can clearly see that it took double as long as normal. But when you look at it long term, we are still in a potential decline. Let me zoom in on the potential decline. If you look at the current cycle, then we see a clear uptrend from 2023 all the way until July of 2025, roughly, and then we dropped. A confirmation of that is first when you see the trend line, it got broken. That's the first trigger, but we also broke the EMA bands. We broke the three EMAs that I track, and then we retested to the upside with a classic FIB retracement before continuation, which is in that zone at point C. We saw a rejection, and we are still trading below that EMA band. As how it is looking right now, we are at least making a symmetric move, a harmonic ABCD, which will take us to roughly 52%, which is also the weekly 200 moving average. And it makes sense because if we look at prior cycles, then at the very least in every cycle, we saw some kind of expansion for altcoins. And I have made it clear that we are seeing momentum, but we are not really seeing that expansion yet. And we are seeing the same signal on BTC dominance because we are seeing a start of a signal, but we need to see that push. And what I'm seeing, and I did not expect that, is that it seems like that push is building. And we are yet to see that performance, while historically altcoins should already be a lot higher. And while they are not at bear market low prices, as I've shown in previous charts, they are still depressed and overall very undervalued right now. And that is something that is different for this cycle. If we look at once more at the total market caps, Bitcoin expanded, total 2 went to its all-time highs, remains midlined. And then if we look at small caps, at the others without the top 10 included, then we see that they are even lower. They are not at bear market levels, which we saw in 23, but expansion, we aren't even there. We haven't even touched the previous highs. Momentum is there. Prices are not at bear market lows, but it seems momentum-wise that we are. And I think that sums up the whole issue with investors, altcoins, and crypto right now. But before I give you my summary, I want to share something very critically about Bitcoin. Has Bitcoin peaked or not? I have been a big bull. I expected Bitcoin to trade. My first target was 100 to 120,000. I upped that to 130,000 to 150 at the start of 25. We traded all the way until 126 right now. So I basically missed my profit taking by a few couple $1,000. And I have to say right now that the potential is at least 50% that Bitcoin itself has peaked. And that is very strange if you look at all the charts with altcoins. It should imply that altcoins go into a bear market and into a very, very bad bear market. And we are seeing actually the opposite. It looks like altcoins have been in a bear market and they're going to expand. But if you look at Bitcoin, it's different. So one thing that I've seen this cycle is that we see Wyckoff accumulations and Wyckoff distributions very clearly. This cycle has two things. It has very long range periods and it has very short run-ups, and it's like only ranging. People are complaining there's no performance, only ranging, waiting. And that's because of Wyckoff structures. I believe that because we have ETFs, because we have big players like Tom Lee, all the treasury companies, all those people involved in crypto like BlackRock and JP Morgan and whatever, all these people, they are playing games that they are playing on TradFi markets. And games they play is they need liquidity. And in order for them to get liquidity to be long or to liquidate and be short and sell, they need to get distributed or accumulated, and that is why they drive price in certain patterns, so that they do this without giving a clear signal to markets that they are doing something. And that is basically what you see in a Wyckoff pattern. In a Wyckoff pattern, you can see these institutional behaviors. And I've basically drawn all the major ones for this cycle on this image right now. And we start at the left. The first one, it was in March of 2024. Actually, the first one was a cycle bottom. I left that one out. But the next one was when we had a run-up in 24 in March. you always have certain indications. You will see words like BC, etc., etc. I will walk you through what I'm seeing right now and why I believe chances are very high that Bitcoin has peaked, but I will give you clear levels as how you can check that may not be the case and what to expect as well. So hang on a little bit longer before I get to the conclusion. It will really be worth your time. So we see a certain buy climax. It means buyers are exhausted. And we see that by the preliminary supply with PSI. You see that in the volume already. We reach a buy climax, not enough buyers in March 24. So buyers are exhausted. We automatically flip to sellers. We get an automated reaction on lower volumes because there are not a lot of sellers stepping in after a surge up. Then they try to take the market to a new high, which means a ST secondary test. But as you can see on the secondary test, we had lower volumes on that already. You can see the red bars moving lower. So there's not a lot of momentum. There's not a lot of trades being done at the time. So that secondary test to break higher fails. We basically go into what is called a ranging market, which is defined by the buying climax and by the automatic reaction area, let's say. Then there are some up thrusts and lower thrusts marked by UT and ST area. And eventually we see a spring, and that's very important. We see a spring. Now, the spring is very clear. It is a breakout of the range lower. So they are basically testing, can we push price lower, which is something they do on a spring, in a Wyckoff spring, to grab liquidity before taking things higher. And you can clearly see that they done that, and you see a big volume spike on that occasion as well. They took liquidity lower and then they run prices higher. And that is a classic, what they call Wyckoff reaccumulation or Wyckoff accumulation after a breakout. They took markets higher. We see a sign of strength in October, November of 24, followed by a big surge of green volume, which confirms the breakout. We go higher, and what happens is we move to new all-time highs from the 70K all the way to 104 and 5. And we basically see the same, but this time different. We do not see a reaccumulation, but we actually get a distribution. We see a buying climax, automatic selling. Then we see an upthrust, which is basically a bull trap. So they push prices, as they've done in 21, higher, slightly higher to get people long. And then they take the market back lower. So you can see there's no real volume coming in. There's no new volume highs coming in at the time of the upthrust in February 25. What happens is price is trending lower, volume is falling away in March and in February, March, volume falls away, then selling volume basically increases and they drive prices lower. They drive prices lower into March of this year. And basically what happened was we saw a reaccumulation. We saw preliminary support. So the exhausters, the sellers get exhausted. Then we got a selling climax, which is SC, which you saw in March, April of this year, an automatic reaction. Then we saw another spring, accompanied by a spike in volume once more. They try to push markets lower. There's a lot of volume coming in. We see a sign of strength and we push out higher into new all-time highs. And that's basically the all-time highs that we have seen in September. So we see preliminary support, which basically means that we are distributing. There are not many buyers left to push price. People are basically scaling out, and we see like a flat zone of resistance. And then we have a buyer's climax, a minor new high, one more automatic reaction lower, secondary test that fails, sign of weakness. We also almost broke lower. And then, very important, we had an upthrust. For the second time, we had the same pattern as at the start of the year. when we actually had to break higher, as I said, with the megaphone structure, we did not. And you can clearly see that after the upthrust, which was not on high volume, we did see a big spike lower on high volume, very high volume actually, the highest which we have not seen since a very long time. And that is an indication that it was a bull trap and that it is likely going to be a distribution, because we are getting negative volume here and we are getting big volume spikes on the move lower. What we saw was a last point of supply, and then we broke the trend and we actually broke lower. And interesting part is that it could be that we broke lower, but now driven by the SPX price also correcting since the end of October, that also made us drop even harder this month. And I'm hearing also news from people right now that they are saying that a market maker has to cover his losses and that is driving prices as low as we are seeing right now. That could be the case, who knows? But right now, it is looking as if price has made a cyclical top because of what I just pointed out. We saw a distribution, and distribution is basically big players selling. And so we are now potentially making a low. We have very bad sentiment on Bitcoin. I showed you that before. We're now going to make a low. The low is going to be a seller's climax. We are seeing now on the books that there are almost no people left at these current levels. So sellers will get exhausted. We will see an automatic reaction to the upside, and that will probably give us a range. I expect the upside to be until the 100K level somewhere, and there we will likely have a new range between 100, 108,000 potentially, and the current low, how low that could be. I expect around 80K somewhere. And then we have a new range. What we have to do is rewatch, is this a reaccumulation as we have seen in April 25? Or is this another distribution as we have seen at the start and right now, as I just explained? We will likely remain in a range. Market makers will accumulate without showing the market their hand, or they will sell even further, and we are in a bear market. So you only have to look at the range high and the range low of that range. And if we break higher, then it's likely an accumulation. And if it breaks lower, or you see volume coming into the downside, like bears going to push once more, then it's likely another distribution, and we are going a lot lower. Then we are likely going to see a retracement around 70%, which we have seen all previous cycles, because then the 4-year cycle would be valid, for Bitcoin at least. It would be valid, and then it's sane to expect we see the same kind of declines that we have always seen, and we will probably bottom around November or October of the year. That's basically my game plan. For Bitcoin specifically. The strange thing about this is what I said before, and that is that altcoins are giving a totally different kind of picture, because Bitcoin is doing a lot of things and altcoins are basically having momentum-wise a totally different cycle. And also performance-wise, altcoins have not really had their cycle. So it's really strange what is happening right now. Keep in mind that the current retracement lower is still a standard correction for this cycle. We have seen this 2 times before, which means that it could still be an accumulation and we could still see new highs at this point, even though this looks very bearish. Because I just showed you that they are doing the same playbook which they have been doing before, which they have done since 2021, since institutions got involved, which they also have done so in 2025. So chances are still small, but they are still alive, that we could see a reaccumulation right here. You know the levels, you know what to watch, and that's my game plan. If we are going lower, I will probably be selling, because in bear markets, normally we see bad performance. Another thing I want to talk about is that lately, Bitcoin has been following traditional markets very well. If you look at this past cycle, it has been tracking SPX very well. So the green line is SPX, the other line is crypto. We formed the bottom in 22. Bitcoin formed its low a little bit later. But then if you look at the highs that we made in August of 23, July and September, in that period, then you see that Bitcoin made its high first, and then slightly later SPX made its high. Then they moved to a low in tandem. SPX broke out all the way higher. Bitcoin saw a distribution in May to November, roughly, of 2024, while SPX kept grinding higher, but generally they moved higher in tandem. In the bigger picture, they peaked. Bitcoin peaked slightly before SPX once more at the start of 2025. They crashed. Then they both slightly slower this time for Bitcoin, while the peak of SPX was slightly faster for like a week. Then they both moved up once more. And now you see that Bitcoin was having that retracement. And when equity started retracing as well, that actually added negative momentum to the current Bitcoin sell-off. And I showed that with the arrow that we are 5% down on SPX. And that also drove down the current move for Bitcoin. So I would not be surprised that the cycle is different for crypto, because yeah, let me just talk about my outlook, and then I will get back to that. So Bitcoin top is likely reached, considering the break of the 50-week moving average where people are talking about, considering the 4-year cycle, it is likely. We cannot assume something different if it's looking like the same is playing out. So there's a 50% chance, yeah? We get validation. If we break higher, you have the 1, 2, 3 levels on BTC, which you want to see price-wise. You have the current Wyckoff reaccumulation or distribution, which you can look at to see if we break higher, then you can follow the 1, 2, 3 steps I explained. If that does not happen, it's clear we are in a bear market. But then the question comes, sentiment is very bad right now. And very often it's not a good time to sell when sentiment is bad. So even if we are in a bear market for Bitcoin, and even if we are in a bear market for Bitcoin and alts, I would wait for a sentiment reset. I would wait for a bounce to sell. And considering the sentiment being so bad, at least we could see a rally, a sizable rally actually for altcoins. Last time we had a bear market in 22, between January and April, altcoins still performed 50% higher. So if you want to exit, I would wait for, personally, I would wait for a bounce to sell and not sell at these very extreme levels themselves. At the very least, it has shown that we get a bounce. Many indicators will continue to fail. I would look at indicators that look at the past, all the on-chain stuff. It's clear that does not work. Stay with momentum, volume indicators like Wyckoff, volume profiles, momentum indicators, price analysis, cyclicals that do play out, not like on-chains, because they are unreliable in my opinion. So I do not like to include them too much. I use them as a little bit of confluence, but not too much. Then if you look at the momentum and the cyclicals for altcoins, it's clear that it's totally different from prior cycles. So even if Bitcoin has peaked, it could be that the Bitcoin cycle is changing, and it could be because of Bitcoin halving is no longer an event. Current reduction in the Bitcoin's mind is less than 1%. Difference before the halving. In prior cycles in 2013 and in 2018 cycle, which drove those two cycles, we saw roughly 20% or 6% change. That's a big change in supply demand. But right now, less than 1%. We see OGs selling, we see ETFs buying. I mean, I think it's a non-event. So it's clear to me that the cycle is changing. The last cycle, Bitcoin has moved a lot with equities. There's a lot of correlations to macro markets. I will make a different video about macro markets after this one, which looks at macro and crypto to see what we see there. But momentum for altcoins is different. We are more looking like we are at bear market lows, not at the top. Even price is still elevated, roughly. And one thing is clear for me, the crypto cycle is clearly changing. I mean, well, I've been in this market since 2013. For me, it has been a year. I mean, I have to admit, even for me, it's so hard to invest in this market, to find alpha, to find follow through. I have to resort to macro. I have to resort to my charts, to my analysis, and I have to stick to it because it's clear that there are so many things off right now that it's hard. So my game plan is very clear. I think Bitcoin has peaked, likely. You know my validations, invalidations. I'm watching that. If it's not, if it hasn't peaked and we go on, altcoins will perform very well. It could be that Bitcoin peaked and altcoins still have a short period of time to have good performance if you follow the classic cycle. We still can go up mid-December to the end of January, 6 to 8 weeks in total. We still have that time right now, and altcoins can see good returns. That's possible. Even my charts show that is possible. It could be that the crypto cycle is not done, then it's good. We see even more performance. It could be that the cycle is lengthening because it follows the macro cycle more, and liquidity has been limited in this cycle. Perhaps that is why altcoins are in a bear market. Perhaps that is why they may come out of a bear market and they may expand in 2026. It's also very likely that that is something that may occur because global markets may continue their upside momentum as well, which I have shown in another video I made. Q4 seasonality is strong. If the Q4 seasonality is weak, we could see strong rollover into the first quarter of next year, which could also drive momentum for crypto. So it's very hard to say. I'm going to see what the bounce will give us and what the indicators I speak about do at that specific given time. And I will also look at macro markets, at US data points, unemployment, CPI, whatever, and I will look at liquidity. And if liquidity looks favorable, if macro for Q1 looks favorable, then I think that there is still a chance for altcoins to make a run. Even if it's not in the classic cycle, I will remain structurally bullish on altcoins. For now, I'm structurally bearish on Bitcoin until proven otherwise. And I think if the cycle expands, that it has room to expand until the end of Q1 or April, because very often when we have a certain trend in Q4, we see a different kind of trend soon after. We saw the same in 22. We saw a down push after the cycle peak into January, and then we saw some upside in relief into April. So that is what I believe will happen at the very least. I will be selling there if I'm convinced the cycle is over. If I get enough confirmation macro and crypto-wise that there may be continuation because Bitcoin dominance is dropping, all the things are continuing to happen, I will sell partially, but I will also keep some high conviction positions. And I will give you updates as I see them. So do not give up yet. I know markets are very rough, sentiment is very bad, but I still think there is a shot. I think so many people are missing out, are confused because the cycle is really changing. And we just have to go with probabilities. And for altcoins, probabilities are still there. Yeah, I'm staying bullish for right now. And I will make a new update video soon as we do get a bounce and I see the reaction on that bounce. Take care. Have a nice day. If you like the video, please like and subscribe. And see you guys later. Ciao, ciao.